Hey guys, how you doing? You guys hear me
Hey,
all right?
yep. Hey, Jackson.
Loud and clear.
Hey,
Beautiful.
Herwig.
I think that was Jason. Was that Jason or Herwig?
Wow.
It's Jason through the STM account.
Beautiful.
I think I recognize his voice.
Gonna invite our other speakers here. Herwig, can you hear us?
Make it. How we doing?
Doing incredible. Thanks for joining us today. Super excited to have you.
Absolutely. Glad to be here. Thanks for putting this together.
Always. Really appreciate you joining. Dr. Murphy, you can hear us all right?
Loud and clear.
Beautiful. Well, we've got a couple listeners here, so I think that we can start to kick things off. I'm really, really excited to have our friends from Security Token Market join us today. They just had what was their first annual Tokenize This conference, which was a Security Token Summit, where they gathered people that are tokenizing assets, institutions, people from all around the tokenization industry to come and get together and have some really exciting conversations. And it seemed just absolutely phenomenal. Our CEO, Cole Snell, was there. I wish I could have been down there. Been working through all the YouTube videos you guys have put up. But today we're going to be working through a recap of that conference. And so we're very excited to have Jason Barraza and Herwig from Security Token Market. And for the audience, guys, could you guys do a quick introduction?
Happy to. Thank you, everybody who's joining in and listening. My name is Herwig. I'm the founder and CEO of Security Token Market, and we are a website that basically acts as price discovery for the industry. You know, what are tokenized assets? Where do they trade? What is the price of it? What's the volume, etc.? You can check it out at stm.co. We've been doing it since 2018, which is around when this stuff started. So per what Jackson just said, we finally felt that it was time to put together a industry conference that really was designed for real world assets for security tokens, not just a panel or a side event to crypto events, but really one that was dedicated for the whole industry. And I can't wait to get into it.
Thank you for joining us, Herwig. It's really, really great to have you. And Jason, if you could also do a quick intro, that would be really incredible.
Yeah, happy to. Thanks for having us. Jason Barraza here on the STM account. I'm COO here at STM. Herwig pretty much covered it on Tokenize This. Just to add, I guess, a little more is, our audience at STM is both retail and institutional. And so we figured, we curate a conference that kind of encompasses both in terms of topics, the keynote speakers, fireside chats, etc. And so, just happy to dive into any and all of it.
Great. Thank you guys for doing those introductions. Really, really great to have you guys. And I'm joined by our Infineo team, our chief economist, Dr. Robert Murphy, Noah Pollack, our growth manager, and Alec Beckman, our director of digital assets and business development. And we're really, really excited to kind of dive in a little bit more to this conference with you guys today. So to kick things off and keep things light, I'm honestly just really excited to hear your guys' key takeaways from the conference. Were there any key themes that you guys saw, or any takeaways from the keynote speakers that you guys had that really stuck with you?
Yeah, I mean, it's hard to sum all of them up because we had 2 days of speaking. It was a lot, but the key takeaways that I definitely got from at least the second day on the institutional day is the institutions are here. They've been paying attention for a while, and now they're all getting very active. JPM actually announced that they're going to be opening up their side of the business more to outside of the internal, business unit that they've been working through. And Onyx is, of course, the digital asset division of JP Morgan, for those who don't know. But we saw Franklin Templeton, another trillion-dollar asset manager, speaking. Northern Trust, another one, speaking. We heard from the DTCC as well as many other players. They recognize that tokenization really is the new paradigm. It's the new technology that's going to power capital markets, and the efficiencies are beyond insane. That's just a lot of the key takeaways we're going to get into, but Of course, I'll let Jason here speak to more about what we heard on day one.
Yeah, a variety of things, while Herwig, kind of encompassed the institutional day, as he mentioned on day two. Day one was really focused on, use cases, for example, so different types of assets. We've heard on numerous panels, the common theme being how you can, for example, the blockchains don't necessarily matter as much in terms of which one you choose. More so, it's interoperability. It's diving into which one is best suited for your asset. But at the same time, you don't want to, silo out users or communities one way or the other. So we had a great panel on blockchains moderated by Chainlink, who is well known across the industry for interoperability. And so I think they did a very good job at, kind of blending those themes together. We talked about, how creative you can get with tokenization in terms of how you structure certain assets, the types of benefits that can come along, not necessarily needing to silo out utility versus the security. You can, actually use the same technology for both. All sorts of themes along those lines. And, we're seeing a lot more adoption come along, both on the retail and institutional side, as Herwig alluded to. And, I'm sure, we'll dive a little deeper into individual topics as well as the conversation evolves.
We heard from Solana, Stellar, Ripple, Avalanche, Provenance, and many others. But Jackson, I know you said you were going through them already. I'm sure you liked the Realty one. I don't know if you saw that keynote yet, but a lot of very cool stuff where people don't realize that DeFi and RWAs have already intersected, in this case for real estate. But it is a massive undertaking what they've done. It was really cool to learn how Realty was structured and set up.
Hey, guys, that's first off awesome. And by the way, just everything I've heard about the conference was that it was world-class. To no shock, just, based off of your production value from your show and just everything that you put out throughout the years. So really great to hear about the conference. In terms of, Jason just mentioned and Herwig kind of followed on about the use cases that you heard. And I just had a question about kind of what were the main use cases that were being talked about in terms of different assets that are being tokenized. Obviously, real estate has had, a big hold on the industry, more in theory and I guess some in practice in the past, 6 years since you guys have been doing this. But, I've seen over the past year a lot of tokenized treasuries and tokenized money markets coming up. And it seems like actually a really good use case just because the returns are so predictable. It seems like a really good thing to get a lot of this technology off the ground. But were there any other use cases that really stood out at you? And just would love to hear kind of what was talked about in that regard.
Yeah, there's of course a lot of sort of more bespoke use cases. We even touched a little bit upon JP Morgan. Actually, they recently announced a new division part of Onyx where they worked with a municipality. I believe it was Quincy in Massachusetts. It's a town, and they actually did a $10 million municipal bond for them on chain. They call it digital debt services, which is just a sign to come that you're going to see a lot of bonds get tokenized. We've already seen that happening around the world. It's actually pretty popular, especially over in Asia and in Europe as well. We're going to start seeing a lot more bond tokenization happening. But, this is just the proof of what we saw at the conference, which is everything's getting tokenized. We heard from Oasis Pro, and, they're tokenizing diamonds and all kinds of other stuff. Of course, Cole was out there spreading the gospel about life insurance and what Infineo is doing, right? So there's all the use cases, but I think treasuries and money market funds was the most popular, Alec. And I think it goes beyond yields and just the predictability and the security, of course, behind them. But it's about building the foundation for real world assets for the new capital markets, right? If you want to settle on chain, you need a counterparty. And USDC is a great, of course, counterparty to settle securities into. But of course, the whole point of having everything tokenized is that we could settle into anything. And so why not put a pair together? And this is sort of the concept behind a lot of these money market funds, including Biddle and others, which is by BlackRock, that they want to go ahead and say, look, the future marketplaces where you want to settle into, and this is actually something most people are used to today with brokerage accounts, you cash out into a money market fund because it's automatically going to start giving you, 5% or whatever it is based on the market. And that's just a better way to hold money and assets in real time. And that's something you can do with tokenization. So I think this is a much bigger thing you're going to see all over, Alec, the next few years. We're going to see billions and billions and hundreds of billions eventually in size because these products will be used as settlement tools.
That's awesome. Thanks for that explanation, Herwig. I think that was excellent. Well said.
So on that note, I'm really interested to hear a little bit more of some of the practical applications of tokenization. I love how you just said that the treasuries and the money market funds coming on chain is really about building the foundation for capital markets. But we have seen some success in terms of more, I guess when people think tokenization, more practical applications such as the real estate, potentially the diamonds, and even what we're doing with life insurance here at Infineo that you mentioned. So I'd love to potentially have you guys explain potentially what Realty does. I'm very familiar with them. I love them. I've been following them for years. But for our audience here, if you could explain who Realty is, how they participated in the conference, the announcements they made, and then potentially also explain what Oasis Pro is doing with tokenizing diamonds. I'd love to hear a little more about that.
Yeah, happy to take this Realty one just because I did the keynote with the two CEOs who are brothers. I'll let Jason handle some of the other use cases, but Realty is a really indeed unique use case. In fact, this was supposedly the first time that both the brothers shared the stage talking about Realty, so that was kind of cool. They're a funny dynamic. You should definitely check it out on YouTube. But these guys have done something spectacular and a little bit more behind the scenes or just a little more unknown because they never need to do any marketing and they target overseas investors. So especially if you're in the U.S. market, you might not have heard of them. But Realty has sold over $110 million more, if so for sure today, in tokenized properties. What they've done is take hundreds of different properties, mostly Section 8 housing, so it's government subsidized income with, a pretty long line of tenants always ready to fill vacancies. So it's been a very popular real estate use case, US dollar denominated, that has mostly been sold to well over, I think they said 120 countries around the world, but predominantly in France and Spain and areas in Europe. Now, they didn't just stop there and basically tokenize US property and sell it. They actually went ahead and created a whole DeFi infrastructure that was designed to be regulated and compliant, essentially a whitelisted permissioned environment, where they actually first went to Uniswap, but that didn't work for too long before they got kicked out, and they had to build their own automated market maker where people can go and basically tap into pools where they could sell to if they want liquidity for their token. There's also the YAM marketplace, which is a peer-to-peer market they created. They also have done collateralization partnerships. They have their own lending protocol, as well as they partner with OV. You can see that they've made it possible to take your tokenized Realty token, your U.S. property, and do all kinds of cool things with it that you're used to in DeFi. They've got over 20,000 token holders. They've distributed over $17 million in rent that you collect every week. They've really built a whole system, and it doesn't end there. What they've now done is they want to decentralize themselves. So beyond tokenizing the company through a Switzerland SPV, which is a whole nother bottle of worms to go into the benefits of that, but they're actually also launching a DAO, and they launched a token called the Reg token, and the stands for Real Token Ecosystem Governance Token, and it's designed to essentially enable the Realty user base to both incentivize buying and collecting and owning, but also to one day vote on who gets to tokenize on Realty. So really, truly trying to make the technology company Realty just that, and essentially allow the community to run their protocol. So it's a very cool vision. They got a whole white paper. They've been doing this for over 5 years. They're an incredible company, and we're actually going to be announcing some pretty cool stuff with them very soon.
That's awesome. Oh, sorry. Yeah. Go ahead, Jason.
No, I was just going to answer the second half of the question. Herwig did it. Herwig did a very nice Herwig, you might need a meet on that one. Herwig did a great explanation on realty there. To answer your question, Jackson, on the Diamond Fund, for example, I actually did cover it on our newsletter on the April 1st edition. Our newsletter being What's Drippin'. So the Diamond Fund is one that Oasis Pro is tokenizing through using a company or the issuer being Diamond Standard Fund. And this really speaks towards alternatives and access to them, which I'm happy to elaborate on. But in general, this fund essentially is tokenized on Avalanche. It's a fund structure, and because you're able to invest into it with pre-tax dollars, it's eligible for endowments, pension funds, retirement accounts such as an IRA. The idea being that now you'll have more easy access, I guess, into such an asset class that's an alternative, whereas in the past, it's not that easy to get into something like this. And according to Avalanche's press release, only 1% of the diamond market is investor-owned, largely due to a lack of standardization and subjectivity in valuation, right? And so my point being that, this is a really cool use case if you want to, diversify your portfolio, but even broader looking into the bigger picture, this is something that we touched on during the Project Guardian panel, which I'm happy to elaborate on later, which is the idea that, when you have a portfolio, usually you're looking at fixed income and equities, but you don't necessarily have a lot of alternatives in there. Or if you do, and you have clients that want it, it's very hard to restructure those portfolios. And that's something that tokenization is starting to enable is portfolio rebalancing, structuring based on risk, based on asset class appetite. This also talks towards the transfer of wealth that's going on, which is another thing that a couple different sessions touched on. The idea being that there's new risk appetites, there's new wants for what these new people want to invest into, whether it's crypto, tokenized securities, et cetera. And so blockchain is really helping streamline all these processes.
Yeah, this is Bob Murphy. Can I just ask you a follow-up there? You just said something real quick there. I just want to highlight that you were talking about people getting the diamond market. I think there's probably a lot of people that in terms of like having diamonds as an asset class, or I know also people with gold and silver even, that it's in principle, they're worried about the strength of the dollar or, whatever their local government fiat currency is, depending where they're located. And they know in principle it would be good to own some of that, but like to do it physically seems like a real pain. And then I'd have to store it somewhere to get insurance or get it. And so I think, can you just speak to the difference between tokenization, just making things a little bit easier on the margin for existing holders of these assets versus opening it up to people, like a brand new asset class for people who like actually don't do it right now, but they would if it was tokenized?
Yeah, no, happy to. I mean, the idea really is, as you mentioned, if you're investing directly into diamonds, you're talking about storage and safekeeping, insurance, all this other good stuff, which a lot of people don't necessarily want to go through the hassle of. This specific use case is through a fund. You're investing into a fund that then takes care of all those things. And so aside from, all the hands-on things that most investors don't want to go into or go through, you're also going to be able to liquidate a little easier. You don't have to wait to find another buyer or individually find that other buyer. You can trade it on an alternative trading system. You don't have to lose your whole position either, because it's a little easier to find maybe a fraction that someone that would be willing to buy your fraction of your investment. Now, that could be because you want to invest into something else, or you just need quick cash for, whatever the case may be. So it's really taking the operations out of the equation from an investor standpoint, putting on the issuer themselves, which, let's be honest, some of the issuers are a little bit more well-versed in their respective spaces than the individual investors. And so tokenization really allows for some of that easier access, once again, to whether it's for portfolio reasons or because you want to mitigate risk. All those good different reasons. Not to mention also the minimum investment, right? Some of these assets, whether it's diamonds or other alternatives, require a very high investment to even get in on it. Whereas now, in this case, for example, it has a $10,000 minimum, something a little bit more digestible, of course, depending on who you're talking to. And, some of these are for more accredited investors and so forth. But again, it's a little bit more access. And then the last point I'll say is not just the access, but the granularity. Right. It goes back to the idea that you don't have to invest, if you only have $100,000 to invest, you don't have to put in all 100 or 70,000 of it. You can put a smaller portion and then fractionalize from there.
So that's awesome. And thank you for that, Jason. So I had a question for the both of you, and I wanted to get your opinions on this, and then I want to hear kind of what the sentiment was from the speakers at the conference. But I heard a lot of things, from what Jason just said about improved access to specific assets like diamonds. I heard Herwig speak earlier about the amount of users using a specific wallet on a specific platform. So I was just curious your take on where are we in the adoption cycle right now of real world assets. Obviously, it's been a long road since we've started in this industry, and there have been many uphill battles, including things like accessibility, liquidity, ease of use, all these different things. But kind of where are we right now in that like adoption cycle and just bringing people into a tokenized ecosystem or framework?
Yeah, it's tough to kind of put a reference in terms of a frame, but like if you were to kind of look at that, early adopters versus innovators stage, we may be just right in between the two, hopping into the early adopter stage, but it's still super early days. Everybody is, from an institutional side, still doing proof of concepts. Doing things with certain intent to prove efficiencies and show that it's possible, but they're not putting their main products into the mix yet. In fact, many groups, especially on the institutional side, are just saying that this is a new division. This isn't taking the old system and gutting it and then putting in blockchain. We're going to have the old system. Everything's pretty much going to stay on the old rails. Maybe some of it gets converted, but more likely mirrored, and everything new will be natively issued on-chain on a separate system. So they're building a whole new, system as opposed to taking the existing system and onboarding it, right? So it's going to be a slow several years as we move into more proven territory. Regulation, hopefully, especially as we've seen most recently, may also help ease that path. And then just on the retail side, specifically, it's still, small volumes, right? If you go to stm.co, you can see the volumes is in the 6 to 7 figures every day. It's a far cry from how much is traded via crypto and via stock markets. But what you're seeing is everything is getting attacked, from, the different types of assets to the structures to jurisdictions to the different blockchains. There's going to be use cases for every asset on every blockchain, every jurisdiction, all over. And it's just a classic chicken and the egg, in my opinion. Building these markets is tough. And now that there's actually sort of crypto sentiment that's positive, it actually used to be very negative. People, I remember getting laughed out of rooms bringing up security tokens back in before 2020. And now it's actually cool to talk about this because people are recognizing, okay, we want to tie in real world value. We get that there's efficiency here, and we recognize that it's actually going to bring in a lot of good to the industry if we, enable RWA integration. So that's my takeaway, Alec, is that it's still early days, which is ripe for early entrepreneurs who want to build, issuers who want to take advantage of being a first mover on this technology. That's why you have the likes of Wisdom Tree, a huge asset manager, even Franklin Templeton and others, even BlackRock, the largest in the world asset manager, right? That's why they're all saying this is the future and this is going to be an edge. So there's no time right now like the present to get into it, but it's still definitely still early.
Yeah, I couldn't agree more. At some point, from Anthony Basili's fireside chat with Peter Gaffney, our head of research, Anthony Basili being the head of tokenization at Coinbase, one of the things he brought up was infrastructure, right? And technology. Not everyone has to be the issuer or an issuance platform. You can provide technology to try to blend some of these together or tie some of those knots. But to Herwig's point, every asset class has different infrastructure that's needed from front to back office. And so what you'll start probably seeing is, some asset classes coming on chain a little faster than others. But as more robust assets come on chain, you'll start seeing a little bit more adoption, a little bit more interest, both from the retail and institutional side as they try testing it out That's why you might see, multiple money market funds or liquidity products. I think one of the easier use cases for them to at least get their feet wet, through either proof of concept or even in production mode, as we saw with BlackRock. And then as that evolves, they'll probably start deploying a little bit more of their actual assets on chain. But again, to Herwig's point, it's going to take a little longer than we had hoped for. Nonetheless, we are seeing more traction coming on.
Yeah, I will end on the fact that the industry is now growing faster than ever before. The last 6 to 8 years have been very slow growth, and now we're experiencing immense growth. So I think we're gonna see the next 2 to 3 years be more than 3 to 4 times the progress we've seen just in the last 6 to 8.
Do you think that progress is going to be driven by the institutional adoption that we're starting to see, or is that going to be through products being utilized more by retail investors, or kind of a combination of both?
The retail will always have slow growth adoption. This is without a doubt in my mind, absolutely institutional driven, especially the last 18 months or so and the next forward 18 months. It's because they are the ones who are going to be able to bring in signs. They're going to basically validate this technology. As soon as BlackRock got involved, suddenly now the technology is being taken very seriously by regulators and others because they have to. And so because of all of that, they're going to be the ones that make this technology household and standard, if you will. Private markets have always been a mess, and that's where a lot of these, retail projects tend to be aimed because the public markets function very well. So private markets have their own mess to solve in order to create, high levels of volume and get to the same level as public markets. I think that's a whole different road, but institutions are the ones that are going to drive this technology forward the next 3 years and standardize it.
That makes a ton of sense to me. I've been following kind of the proof of concepts for a while, and it seems like they've been going on for a couple of years now. And it seems like it's potentially almost time for these proof of concepts to come live. Were there proof of concepts that were discussed that you guys were impressed by, or just generally any new tech that was discussed that people are utilizing or coming out with?
I mean, one of the first ones that comes to mind, call me a little biased from a wealth management standpoint, but it would be Project Guardian. What they did, and this was announced late 2023 with a full report, by the way, that's available for anyone to read, but was really, again, portfolio rebalancing. This goes back to the point of institutions kind of driving this adoption. But, one of the results there was, if you take 100,000 portfolios, you need to rebalance. Typically, it'll take you about 3,000 steps to get it all done, and that's all front to back office. Whereas now with what they proved across different chains, across different funds, across different asset classes, was that you can now do it in a few clicks of a button with what they built. And this was a collaboration between Onyx by JP Morgan, Oasis Pro, Avalanche, Providence, a couple interoperability layers such as Layer 0. And so, that's one of them. And then the other one was, I guess, stat or result that came from it was 18% in savings, which of course gets then, passed on to the end user, the clients, right? Now, again, this is an institutional proof of concept, which is great, and we can't wait to see it come live. But, that will eventually translate over to some, or retail users as well, eventually as that evolves, as they maybe consider, or other institutions consider, adding this technology to more retail-focused services. But again, it has to start somewhere. And so this is a really cool, really fun proof of concept that we saw that I'm really personally excited to see evolve over. And then we saw another entrant to the space, the Project Guardian space, recently also join in. They're going to be testing a few more things in addition to what already was. Also covered it in what's dripping last week, which was Deutsche Bank, that is now joining Project Guardian, also from a wealth management standpoint. Curious to see what results they come up with.
I think Wisdom Tree was another cool example. They launched an app, should be available hopefully very soon in 50 states, but they're an example of using blockchain in the background. We got a lot of other cool concepts of, like essentially realty, self-custody, this concept of owning the stock in the forefront. But for the masses, they may not need or care to take advantage of this technology yet. And so what Wisdom Tree did was they built their own infrastructure over the last 4 years in order to be able to essentially, including getting the licensing, to natively issue funds on chain. They're all public, by the way, 13, I think maybe more in the works at least, public blockchains so that anybody can buy these products. And you download an app and you buy into their various gold ETFs and money market and other different, equities funds. And the benefits they bring to the table are instant settlement. They allow you to, I think, collateralize. They have now a debit card that you can tie to your account. So now you can spend out of your investment account directly. The concept of, why you would want to ever have cash in the bank in the future when you can just have it live in your investment account and you can spend out of your investment account and it's just going to stay there and make money constantly, makes a whole lot more sense than the, savings rates we're getting today. So that's just a cool example of, using blockchain in the background. And there's some other announcements like Denari coming out on their, riding the trend of tokenizing public stocks for foreigners to easily invest and leverage tokenization. To me, this is all examples of, again, why we're tokenizing all these different asset classes so that you can bridge them into DeFi eventually and leverage the real world asset value into a lot of these cool DeFi constructs. And that's going to be a mega trend to bring on retail, I think, in the next 3 to 5 years. But due to regulatory issues there, it's going to be a slower walk than the institutions.
So now that we are seeing these incredible use cases such as Project Guardian, the Wisdom Tree use case you just talked about, Denari, the real estate, treasuries, money market funds, do you feel at this point that it's really new tech coming out? Like, are we seeing advancements in the tech itself, or is it more advancements with how people are utilizing the tech that's been built over the last decade or so?
Definitely a combination, right? You have the people that are focused on using the tech for efficiencies and immediate savings, leveraging it sort of, again, the institutional way, proof of concepts. And then you have those that are going out loud, leveraging the technology to the full extent, like Realty and BlackRock. BlackRock with their BIDL product. I had a great fireside chat with Carlos Domingos, the CEO of Securitize. And Securitize was the technology platform with the licensing, the marketplace, the issuance technology that they chose as their partner for this. They actually invested in them as well. And they have become the largest product essentially overnight. It took them about 40 days, but the largest was Franklin Templeton, had about 370 million in assets under management, and BIDL quickly blew past. Now it's at 450 million or more to become the largest tokenized fund in the space. That's going to obviously achieve billions by the end of the year, in my opinion. Carlos shared his strategy about how they're going to be going after treasuries of large foundations, the blockchain, as well as working, of course, Black on the institutional side, and that they plan to launch more products. So, this is them trying to create new alpha, right? Create new revenue streams, grow their assets under management, create new distribution channels to manage investors and own the customer, because in Wall Street, there's a lot of people that are stuck on middlemen who own the relationships and are, required to be involved and get their cut. And then, of course, there's a DeFi side where you're like Realty, really being able to create your own community and tokenize assets and open them up to new DeFi applications. And that's going to, I think that's creating new technology more so than it is just bringing on new users, but it is doing both, right? So that's the cool thing about this space is it's such a huge, market opportunity, hundreds of trillions of assets out there, that it's going to see incredible explosive growth. And it's already starting to see, nothing like it's ever seen before now.
I think, so really, really cool stuff is obviously going on. And, it makes me feel some FOMO for missing the actual conference, and I'll definitely be there next year. But one of the things that I've been kind of talking about specifically with BIDL the BlackRock fund is how much it's benefiting the entire, both crypto and blockchain and security token ecosystem, where now you have, right now it's limited to qualified purchasers, which is definitely more of an institutional investor. But what it's doing is it's actually providing people who have enough money to move markets, especially with such a small, market like security tokens, which is definitely growing. But you're giving people capital on chain to make investments into, other things. So, for instance, you mentioned that Securitize is the platform that BUIDL is built on. What people are getting now are these, large investors that are receiving distributions in the form of, whether I believe it's USDC, and you can probably correct me if I'm wrong there, Herwig or Jason. But now you have these people that are going to have on-chain capital to, put money into other real-world assets that are on-chain or other crypto investments. So I think this is a really good start, and hopefully we get to see some more of this and expand beyond, the qualified purchaser into, obviously the next step would be accredited investor, and then furthermore, retail and non-accredited investors.
Yeah, you're talking about the macro trend of bringing capital on ramp. There's an on ramp to RWAs, right, or digital tokenized markets. So if you look at the analogy of crypto, there's a lot of on ramps like USDC and a lot of exchanges and Bitcoin and Ethereum and other products that lead to this on ramp of traditional fiat currency into digital crypto money. And what we're now talking about is the same thing, but for tokenized capital markets. And we need to bring traditional assets and traditional fiat on chain. Hence why there's this big push around settlement products, liquidity products, money market funds and such, because they are truly going to be a huge settlement layer. But to your point, like about BlackRock, like they really are doing it in a way that couldn't be more perfect for the industry beyond just the ETFs for crypto. But there's what I like to call token dressing a lot in this industry, where people tokenize, the investment, but really all that it is then is just kind of lives on chain and it doesn't do anything and it doesn't have any capabilities. It's kind of just, a database solution. What BlackRock did was they chose Ethereum. You can actually go to stm.co, and BlackRock's BUIDL is like the first product you can see. You can just click on it. You can find the Ether, the Block Explorer link there, the Ether scan, and you can actually see this activity. For BlackRock to do this for a private fund is unbelievable. Anybody can go and see how this is operating and functioning. They have a partnership. This, has a lot of international investors and investors coming into their money market products. They are backed by BUIDL. So you can see the distributions are actually marked from Ondo Finance growing their AUM, which means the BUIDL product grows in AUM. But then you can also see the distributions from the actual fund back to investors. Millions of dollars being sent, correct, Alec, through USDC. And you can see all of this activity in real time on chain and have a permanent history of it. It's incredible. And it's super funny that even a lot of people, because you can see the wallet, they filled up that wallet with all kinds of NFTs and cryptos just to get marketing attention from the fact that BlackRock is doing this live and in the open. And the coolest thing I'll end on that I just think is incredible is they created with USDC what I call 100% liquidity, which means that you can take your BUIDL and you can convert it into USDC instantly, 100%. That's not finding a counterparty or anything else. It's your counterparty is USDC, and they're just going to take your BUIDL because, of course, for them, they're just receiving more USDC on a monthly basis and converting it to you for USDC. But that has a liquidity component. And so it's a fascinating product that's just absolutely world-class, setting the standard for how tokenization can be used.
And just to give another example there, Alex, to your point about, why there's so many institutions, now looking at this and trying to park money on chain, to Herwig's point about on and off ramp, Now, we saw another small proof of concept from JP Morgan and Barclays, also late 2023, using a tokenized money market fund units to post margin, right? The idea being that, in the past, you would have to liquidate, get out, then post margin. Then once you're good, you can invest back into the funds. Now, with at least in this proof of concept, you didn't even have to leave the fund to begin with. You could have just post margin with those tokenized units. And so that's just another example of, once again, using an on-chain finance and giving the token life, which I think is something that Remy from Realty alluded to in the fireside chat. Is why tokenized is always a question, and part of a good argument is to give the asset more life aside from just the liquidity component. And there's another example.
That's incredible. Thank you for adding that, Jason, and thank you for explaining that, Herwig. You mentioned something that I'm super curious about, and potentially you can give another or a little bit deeper of an explanation. I saw something about this, but I don't know enough about it myself to explain it. You mentioned that as Ondo Finance, another, I believe, tokenized treasury product, correct me if I'm wrong, potentially money market fund, but a tokenized product, when that grows BUIDL as well. And could you potentially explain what that means and how that happens?
Yeah, for sure. So actually, Ondo was around before the BUIDL product, and they were, of course, a popular choice as essentially the same alternative product. The difference is that they actually tokenize their underlying reserve, or their assets, if you will, with a BlackRock money market fund, but a traditional one, which means that they probably had to collect and manage their whole system to work with a traditional money market fund. In this case, BlackRock is the issuer themselves, and they've created a digital version of it. So Ondo said, well, heck, why the hell are we going to use this traditional format when they now have a digital one? So they went ahead and backed their product with the BUIDL as the underlying asset. And they've essentially created a new construct for BUIDL to invest via the Ondo ecosystem, which is open to international investors and others. That's why they're having a lot of success growing their own AUM. But in turn, as they grow their AUM for that product, that means, of course, the BUIDL AUM is going to grow as well, on top of all the other investors that come in through Securitize and BlackRock.
That makes a ton of sense there. Thanks for explaining that. It's super interesting to see both players come into the space, and I'd honestly love to see some sort of case study down the road from Ondo, as opposed to show the efficiency which actually enabled them to.
That would be cool.
It definitely would be very cool. And kind of on this same note, we kind of right now are talking about tokenized funds, money market funds, treasuries, asset management, almost like it's nothing. And it's kind of crazy to me to see the largest institutional players in the space really working with these products. And so I'd love to potentially hit on the evolution, because it hasn't always been like this. You guys have been in the space since the very beginning. And so I'd love if you could potentially talk a little bit about how this sort of on-chain treasuries and money market fund trend started, and where you guys potentially see it going.
Yeah, it started probably like two years ago or so. I mean, it happened right around the time that, with interest rates and the hikes, and treasuries became a very demanding product due to the economic times. And so naturally, especially with crypto as well, always seeking yield, this started to become a use case within crypto, I think, even first. But you also saw it as early as ARCA, which I think has now been around since at least 2021 or 2020. And ARCA has a publicly registered treasuries product that just never saw sort of the limelight, I think, the way some other products have. But they've done a lot of work to make that a very cool, on-chain treasuries product. And so this has been sort of a niche use case until economic times put more attention to it. But the greater trend is what we've been talking about with the on-ramp and the global settlement solution, right? If we're going to transact securities all day long, you're not necessarily going to be swapping securities. You're going to want to settle into the most efficient cash-denominated vehicle that's earning you yield. And of course, money market funds and treasury products, especially with these rates, are going to be the most popular use case. And so now there's an arms race, if you will, to be these, go-to solutions for treasuries, for corporate treasuries, for, marketplaces and settlement solutions and all kinds of other applications for bringing in on-chain yield into this new world of on-chain finance, right?
I love that. Thank you for giving that history. And I think that context is really important for people to understand, because the evolution of this industry is exponential and it's only going to speed up. I actually loved your guys' talk about the STM insights and what you guys are doing, the different charts you're adding, and the different data points that you're tracking on security token market. And so I would love if Jason, Herwig, you guys could potentially talk about what you guys are currently seeing on STM in terms of the current market, and potentially any recent market movements, anything that's really changed the industry, or just big players that you're tracking that you think are notable.
Yeah, happy to. It's something that, we kind of put together for day one, to kind of close out the day, really giving people an idea of, what we're seeing and tracking. For context, we track today over 500, close to 560 tokens across 10 plus blockchains, 15 marketplaces. But we've been tracking these assets for years, since 2018, so we've amassed over 10 million data points. And so we have, a few insights to share there. I think one of the tokens that people have always looked to that kind of, carried the market, or still carry the market cap for tokenized assets, is, Negra, right? About 17 billion-ish in market cap. No small feat there. But, we saw for one of the first times ever in Q1 that another token had actually more liquidity than Negra, and that was VidBee. That's a pre-IPO share or asset out of Switzerland. They're an AI-powered software that essentially, works with YouTube and able to give you more accurate video and document translation, subtitling, dubbing, etc. And so, them alone saw $5 million in volume on March 27th. And that's something that now, a new feature on STM, is you can actually, dive into any given trading token and see, some of those upticks in volume and so forth. So those are some of the things that we've seen there. In terms of, to your question, Jackson, about, other players that we're looking to and tracking and so forth, Figure, has really led the charge on-chain HELOCs. They're using Provenance blockchain for that. They have around $7 billion on-chain, and of course growing. So that's something that, we're working closely with them to track more and more of and try to see what's going on there. But the other trend that we're starting to see also is tokenized debt. Now, granted, a lot of these debt issuances are from one institution to another, or even within the same institution, just different arms. But we've seen over $10 billion of bonds be issued, lifetime, both, that are still active and those that have reached maturity. But we're also starting to see some assets or bonds, that are starting to be a little bit more retail friendly. For example, El Salvador, they are tokenizing a debt instrument or debt offering through Bitfinex Securities. And the idea is that they're going to use the proceeds from this bond issuance, $6.25 million, to build a Hilton hotel at the El Salvador International Airport. So this, of course, kind of, is modeled a little bit after, Aspen Coin, which is another famous use case in the tokenization industry, where you can get perks with it, such as free night stays, but you're also earning, a 10% coupon over the 5-year maturity of this asset. So, we're starting to see some of those bonds come on to light, as mentioned. The other really cool one that I think is worth noting is in Hong Kong. Listed on the Hong Kong Stock Exchange, is a multi-currency digital green bond. Green bonds are starting to come on chain a lot more nowadays, but this specific one that I mentioned was actually multi-tranche, different tranches being different currencies. So you see the Chinese RMB, as well as the Hong Kong dollar, the euro, and USD, all being represented in their respective tranches. All are available, by the way, on STM for you to check out. And last but not least, something that just, to kind of share with the audience here is, if you ever want to look at just general trends or what's going on in the overview of the market or by asset class, we do have STM charts that we just launched a couple months ago. You can find it on stm.co. And, we're always looking for feedback as to new insights that you guys want to see, whether it's asset class specific, token specific, blockchain specific, whatever it may be. So, let us know. But those are some of the cool movements that we've seen across the market in Q1 that I kind of wanted to highlight there.
Sorry, I was just getting a tweet pinned. So if people do want to check out those charts that you mentioned there, you can go to the most recent pinned tweet. So I really appreciate you kind of talking about those industry chat trends, what you're tracking right now and what you're looking to track in the future. I'm always on stm.co looking for the latest data, seeing what's going on in the tokenization industry. There's really not as comprehensive of a database out there, so I highly advise checking it out if you haven't. I've also been pinning it along our conversation, the different conversations and assets we've been talking about. So if you want to check out the newsletter or any of the videos we've been talking about, I highly suggest checking those out, bookmarking them, coming back to them later. And with that, we've got about 10 minutes left here. And so I would love to just hear a little bit more potentially about what's going on in the tokenization of real estate. You guys had, like you said, the Jacobson brothers on stage for the first time, who are really two pioneers in the real estate tokenization industry, some of the most successful. But you guys also had another panel in which you had talked about DeFi and real estate tokenization, in which I believe Realty was a part of again. But I would love if we could just talk about potentially the opportunities and challenges in tokenizing real estate specifically. I just think that that's an easy one for people to understand. So would love to understand where the industry's at right now.
Yeah, that was a great panel because we had Remy moderate it. And, he's not going to hold back on some of these issuers, which I think was great. We had Red Swan, which is another popular marketplace for commercial real estate on the panel. We had Proppy, which is another very popular DeFi, more focused approach. They have a very unique sort of NFTs based model. So we have a lot of different real estate, use cases happening. And again, real estate is one of those asset classes that is so big because there are just so many jurisdictions. There's so many different types of real estate, and there's hundreds of trillions of it that are already in existence, not to mention the debt that's tied to it. So there is a massive opportunity here, but it boils down to real estate has always been seen as this, safe way to grow wealth, and typically very difficult to get access to. REITs became popular on the public marketplaces as an alternative to just buying your home, but that still leaves out a vast majority of the returns in the asset class that can now be tokenized and get access to. And so the concept of fractionalizing it and making it very cheap to invest in real estate as a way to grow wealth is going to be a very popular trend that's only going to catapult in size. And again, you're just going to see everything get unlocked across the world, I think. But the best use cases, of course, are marquee assets alongside what Jason mentioned with the St. Regis. The issuer behind that just launched a platform called Reserve, RSRV. And the concept there is to go to other hotel owners to let them tokenize and essentially offer perks like free night stays and discounts and other things. We've already seen that with villas and the Tuscany National Resort, a golf course in Italy. So this is a popular trend where you can merge the idea of now I know who my investors are and I can treat them as customers seamlessly thanks to this technology. And so I always love to use the example of AMC Popcorn, not to get too off topic, but AMC, they actually have a shareholder perk where if you want to get free popcorn, all you have to do is go to their website and say that you are a shareholder. They do this, they authenticate this by having you check a box. AKA, it's a marketing stunt because there's no way for AMC, a public company, to know who their investors are. But thanks to tokenization, simply by showing off your wallet, how many tokens you own, they now can verify you own popcorn, and maybe depending on how many shares you own, based on how many tokens you have, you might get more perks and other benefits because there's a lot of science behind aligning investors and customers or turning your customers into investors for increased benefits. So back to real estate, real estate is a huge asset class, and it's a classic use case of very illiquid, very archaic, and very driven by middlemen and sort of, specific networks and firms. So it's a ripe opportunity for disruption and democratization, if you will. And so obviously tokenization is going to have a world-changing impact on that industry.
I also like to look at it from a standpoint of geography, right? So how easily can you invest into a property or an asset in, let's say, Dubai? It takes a few steps. And, we saw Red Swan is tokenizing a $4 billion portfolio out of Dubai, which is a mix, by the way, of commercial real estate, agriculture, land, which, as we know, Dubai is coming up with a lot of new developments there, which, of course, probably impacts the value of that real estate. But we also see from an investor standpoint other use cases, right? If you live in Latin America, for example, there's some countries where you have that currency risk, and inflation and so forth. And so, what better asset to invest into than maybe a U.S. Piece of real estate that gives you dividends in U.S. dollar denominated, currency, right? Whether it's USD fiat or USDC, that's another use case from an investor standpoint that maybe was a little harder to access back in the day. So tokenization is another, again, enabling all these different use cases for people. Yeah, real estate is a great use case. I'm glad you guys brought it up because you're right. It is one of the easier concepts to understand when it comes to tokenization.
Amazing. So I know we only have, time for probably one more question. So really quickly, back to the conference, what is, all of them are online. And honestly, if you guys could share, once you start answering this question, how people can view all of the panels and speakers online, that would be great. But what is one that you would really recommend going to watch to the audience?
Oh, that's a tough question because there's so many good ones, Alec. I gotta say, if you're on the DeFi side, check out the Realty keynote if you haven't heard of Realty, and if you're on the institutional side and you're more curious about that, definitely the BlackRock keynote I did with Carlos Domingo. I should say the SecuritiZthis keynote. Although that whole day was filled with just incredible panels and insights.
Yeah, they're all available on our YouTube channel at STMTV Official. Is the handle there if you want to check them out. They're in a playlist called TokenizeThis 2024, all available for viewing. So those are some good keynotes that Herwig recommended. On the panel side, I would say day one, you probably want to look at either the real estate one or maybe investing in tokenized assets if you want to look at different use cases that people have seen across their different platforms. And then on day two, if you're focusing on a little bit more institutional, digital asset infrastructure, I think, was a really good panel that Peter Gaffney moderated. And that one had DTCC on it. It had Northern Trust, Block Invest, which is tokenizing NPLs, non-performing loans out of Italy with Credit Agricole, and so forth. So definitely check those out.
Perfect. And with that, I think we're coming up on time here, guys. So I really, really have had an incredible time talking with you guys. I mean, I feel like we could keep going for hours. There's still so much more to unpack from the conference, but everything I've heard about it has been incredible, and I'm definitely making my way down next year for TokenizeThis. Where can the audience stay in contact with you, stay in touch? If they want the latest updates with security token market, what should they do?
Yeah, check out stm.co and obviously check out our YouTube. But as I think you already kindly pinned it, we have a great newsletter that you can check out what's dripping. You can sign up for that at the bottom of the website. We also have a research platform if you want to get a little bit more involved in the community. We got hundreds of people that are active in the space and a little bit more of a resource-driven environment with webinars and all kinds of documents and things like that, as well as social tools to connect with others in the industry. So that's Security Token Prime, securitytokenprime.com. But yeah, Jackson and Alec and everybody else on the team, we're looking forward to having you down next year for 2025, Tokenize This. But also we'll be doing, actually, we haven't announced it yet, so we'll release it here first. We're going to be doing a workshop series, a little tour of education around the States up until then. So we'll be announcing what cities and when very soon about where you can catch our workshop, which was awesome. We did a full day seminar. We had folks from Fidelity, we had venture capitalists, big real estate groups. They all learned the mechanics and how to tokenize in our workshop. So look out for that as well.
Definitely going to be looking out for that. That's super exciting, guys. I'll definitely be there at the one that's near me, hopefully, fingers crossed. So with that, any last remarks or anything for our user or for the listeners, Jason?
Yeah, no, just, keep an eye on this industry. I think it's more prominent now than ever, with the institutions jumping on as well as retail starting to catch on to tokenized real world assets. So, follow us for education, do your own research, of course. But this is not something to be sleeping on. It's something that's really evolving capital markets as a whole, which also brings new opportunities for both retail and institutional. So anyone listening in, keep an eye out.
Well, this has been our real world asset tokenization space. It was incredible to have our friends at Security Token Market on today to recap their Tokenize This conference, the first of its kind, but not the last. Very, very excited for next year's. I'll definitely be in attendance. Thank you guys for joining us today. And thank you to my team, Dr. Murphy, Noah, and Alec Beckman for their help today on the panel. And really looking forward to having you guys on in the future. Have a good one, everyone.
See you guys.
Thanks. Thanks for having us.